Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Sunday Motivator. Stay tuned at the end for TWR Hot Products and Services. It's May Day, and you know how we like to rock it. 33% discount for the All Access Pass. Link is in the description. Join today and quit wasting that money that's not making money. Comments from the front line. Tonight, I want to highlight one of our members hunting. We did a one-on-one session yesterday, and it was a fantastic session. The dialogue back and forth was great. It's always good when you do a one-on-one mentor session, when you have individuals that are really actually dedicated to learning and growing how to be fantastic traders. So Hunting says, thanks Chuck for the one-on-one and can't wait to use the info that you gave me on Monday. You and Shiner, which is my co-partner, are great people, and if anyone's looking to get their game up or help in their trading, get a one-on-one. And I want to say thank you, Hunting, because we try really hard to provide something for everybody out there. And when we do these one-on-ones, it's a great opportunity to really fine-tune on the individual and get to the specifics of their trading personality. And that's what it's all about, man. You can YouTube all these different things and do this and make this amount of money and all that stuff. But what it really comes down to is everybody is a little bit different. Their risk tolerance, their tendencies, their investing personality, and these one-on-one sessions really give us an opportunity to break the barriers down, strip away the onion so that we can get into there and actually get to the core of what makes them a successful trader so they can go out there and execute. So I appreciate you, and if you're interested in getting yourself a TWR one-on-one mentoring session, directly after this, there's a 45-second promo, and it has all the information on our one-on-one system. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this, or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war. Hot off the press. So the top news that really has everyone still kind of befuddled right now is the issue with the debt ceiling. And so why the stock market will struggle to rally until debt ceiling bank woes are in the rear view. And so it's giving you an understanding. Here's the investors may turn to hide on U.S. debt ceiling deadline looms based on 2001 market reaction. So going back in historical view on what it takes with debt ceiling stuff, stocks are stuck in a trading range, but we're watching the VIX for signs of a breakout. And the real reason to expect a potential rally is that if the debt ceiling can be made before the deadline, it'll give the investor the confidence that the continuation is good to go for the upside. However, if we just get kind of, some more, friction, and basically even if we get like a deal sorta to push it further down the road, that's still not a solid deal. So really what the market needs is it needs a concrete, solid plan moving forward so that the market can continue its rally. Otherwise, we're stuck in this range, this 416 to 405 range on the SPY, which is pretty much sideways motion, not too much breaking out to the upside and not pretty much dropping and breaking down to downside. So something needs to happen to kind of come out of this consolidation zone. And then next up, huge retail earnings coming in this week, all right? A lot of analysts have Walmart as pegged as the clear winner when it comes to the retail sector. That's because Walmart is moving out of the consumer discretionary and going into consumer staple. However, one of their competitors, Target, they definitely are kind of got a bad rap on the Wall Street, and it's a little bit dedicated to the way that they're still in the consumer discretionary, but also they're really pushing that woke agenda, and it's just not getting investors excited about the future outlook of the target brand. So it'll be interesting to see how these play out when we're looking at the earnings that come in this week. Stocks I like. Here's those earnings, and as you can see, Monday, we don't really have much going on. We start to kick in on Monday afternoon where we get Rumble numbers, which is a YouTube competitor. We don't expect too much of that, but then we start kicking it in on Tuesday before the bell. Home Depot and SeaWorld are supposed to give their numbers. PaySafe is one to watch because the other fintechs have kind of been wishy-washy. PaySafe is a little different type of model than the other ones, so it'll be interesting to see how they report, and could be a nice dramatic push, especially if they show some decent improvement in their margins. And then nothing really spectacular going into Tuesday after the close. Then moving into Wednesday, we got Target, TJX, Jack in the Box. Wix will be interesting. Target, again, I'm a little worried on this one. I might take a lotto to the downside on this one. I don't think they're going to make their margins. TJX is a pretty decent one to think about because that one is kind of the, the name brand, but on a budget type of building. Jack in the Box has been interesting for the restaurants. The fast food chains have been doing fairly well. Jack in the Box is interesting because they're doing a lot of promotion with their business overall, so we could see something there. Wix will be kind of, 50-50 on there. They've been doing some improvements onto the internet side of the house, but I don't think a lot of people are spending the money on the elevated features that they have as far as their, web services are concerned. And then going into after hours, Cisco, that'll be interesting to see. Cisco's kind of a wild one. A lot of people think it's more of a safe bet, just kind of sideways motion. But if they get some spectacular earnings, you can definitely see improvement in their margins, and they'll probably push. And then boom, on Thursdays when it all happens, okay? Walmart and Alibaba, definitely two of the big ones that you're watching. I wouldn't be surprised if we start to see Alibaba and Walmart take off and run into earnings. It'll be interesting to see how both of these report. And, Alibaba's the one that I'll expect probably a run into earnings, and I wouldn't want to bet through earnings, even though they'll probably do pretty well. I think it's just too volatile. Walmart's another case, though. It probably will take a little bit of a dump because people are going to profit take, but you'll probably see a quick bounce back to the level and then probably break out to a new level. And then we finish up on Friday with John Deere, which will be interesting because a lot of people are interested in that farming agriculture as it relates to the artificial intelligence revolution as well. So if John Deere can talk about their margins improving and incorporating that AI, expect John Deere to make some decent moves. And with that said, let's go ahead and get into the charts. Here's how the alerts will go. Purple line, that's the bow zone. That's where the fight is going to happen at. And then the blue line on a break from the battle zone, that's where we're looking for follow through to the bull side. And the red line is going to be follow through to the red side. Of course, we're paying attention to the SPY. We got the triggers right there in the purple. We're kind of trading in a sideways motion. Again, like I said, we're basically between like a 404 and 416 area where we're trading in. But any break below or above the battle zone will give us a good idea of a push to the follow through, either the bull on the blue or the bear on the red. This is Rumble On, RMBL. I like this one for actually share accumulation at the level where it's at right now. I think picking up shares is a good idea. You hold the shares 3 to 5 years, you probably be able to double up your money. But if you're looking for a trade, we're looking for anything above or below the trigger points for follow through to the blue or the red line. Home Depot will be interesting. We have strong support down there at around that $286 level. Looks as though we're wanting to trend up. I got a feeling we'll probably trend going into earnings. It'll be interesting to see how they do on earnings. If they do good, then we'll probably see the push and the break towards that blue line. If they don't do so well, we'll probably break down and we'll go retest that previous support to see if we're still in the realm of holding it, which we've held multiple times. So I do see this one for a good push to the upside, a decent little profit if you can catch it and we break the triggers. Don't be afraid to pull the trigger and take the trade. SeaWorld, kind of interesting. It's a lower volume type of stock, so anything will push. I don't know about their earnings. SeaWorld's kind of a little different thing. They got a lot of activists that are on them specifically about cruelty to animals and stuff like that. It is warming up. People are interested in going, so they could see some better numbers, specifically when it's correlated to the pandemic where they didn't have any people going to it. So it'll be interesting to see how they do. We hold the triggers as a good indication. If we break to the upside, we can probably get some continuation follow through. We break to the downside, we're probably going to go down and retest the support. But remember, this is a lower volume stock, so there'll probably be some dramatic shifts along with this, specifically since they have earnings coming up. So just be cautious with this particular one because it can leave you in the dust very easy. Walmart. This is the preferred winner for the consumer discretionary and consumer staples. Walmart is transitioning out of discretionary into staples, which gives it a leg up on their competition. I do like Walmart. I wouldn't be surprised if we see the cool down on earnings, though, just from people profit taking. They've been in this since, the 130s. It's risen up. They're probably going to take a little bit off the table, just preserve some capital and wait for the next bottom up so that they can push for the next breakout. So definitely we could see the breakout. Anything that's above that line could push to that 154, and we could start rolling up into the 160s and the 165s to start getting into our new range where we would be kind of sitting at for the time being. However, I do think that this will probably run into earnings, and then on earnings we'll probably have a little bit of a dip just from people taking cash off the table and just being cautious with the uncertainty of the market. Competitor to Walmart, Target. Target kind of has a similar chart. However, I think that they're going to not hold up so well. Target is having trouble getting out of that consumer discretionary and going into the staples. Also, they're really embracing this woke type of mentality. And as we've seen with the particular stocks, who cares about the politics and stuff like that? We're talking about stocks here. What happens is when the stocks go uber into the woke sentiment, they suffer financially from investors getting into them. So that's basically what I think we'll probably see here. I think that the margins will be a little less than expected, and we'll probably see a sell-off in Target until it comes back down to a relatively lower level, and then you'll start to see investors come back in it from the decreased price value. Jack in the Box. I like Jack in the Box chart. I mean, you can see that this is more of an institutional holding. It's running on more lower volume, and by the chart itself, you can tell that this is more big money that's investing in this. But I do like this right here. I think Jack in the Box is going to do fairly well on their earnings, and I think it'll be a good opportunity to catch a potential next leg up on this particular stock. So I'll be interested to see what Jack does, and I'm definitely bullish more than bearish on this particular stock. And Cisco. Cisco has been quoted by some analysts as being very stable. So it's definitely one of those stocks that it won't move too much, but it's something where people can tuck money away and hide in, essentially. So I do think Cisco is going to do fairly well on their earnings. I wouldn't be surprised if we get the push to the upside to break out of this range that we're in, kind of this $47 to $45 range. I think that we'll probably break out of this range, and we'll start to go looking at the 50s, where we start to find a new home at an upper level. So I am bullish on Cisco going into this earnings and for the forward guidance. Told you guys I would start giving you guys some penny stocks. I'm not going to put any of the lines on these ones. I'm just giving you good ideas based off of things that are moving. So FFIE is definitely, it's 24 cent stock. This thing is having a lot of volume here recently, and I think we're looking for another break to the upside. Now notice it pushed to 33 cents, and then it came dramatically back down and cooled down from there. However, I think we're due for another push to the upside, and we'll probably start holding that upper level because it has a lot of interesting things going on with it and a lot of bullish sentiment moving forward. And GSIT, now this one is interesting because it was running on super low volume. The average volume on this is like 200,000 shares, and it was pushing like 64, 65 million shares, okay? Obviously, this is looking for a low float type of squeeze play and could be, from them boys over at the WSB, pushing it down social media and just getting people to push in. So we'll be watching this one. This will be interesting. If we start to see bullish sentiment, don't be afraid to hop into some shares and see what it does. This thing could easily, with enough, volume and enough push, especially with their low float, this could easily push up in the $20 and even $30 range. So we'll be paying attention to this, seeing how this goes. Just all you got to think about is remember tops, okay? When we're riding these type of trades, you got to be, Johnny on the spot, okay? You're in and you're out, and then you're back in and you're back out, okay? If you get in and you're just expecting this thing to moon, then you're setting yourself up for disaster, okay? You get in, you get your money, you get out, you hop back in on some momentum, you get your money, you get out, so on and so forth, unless you really like to trade for some reason. But considering that it was just like down at $1.47 not too long ago at this particular price with no real news on it, this is one of those that we already know the deal with this. This is a trade and not an investment at this particular price. Upcoming events. First class I have to talk about is I'm going to teach you guys how to trade and read candlestick charts. All right, this is going to happen on 21 May at 1 p.m. Central Standard Time. All you got to do is go to the website, traderswarroom.com/upcoming classes, and you can register right from the website, and hopefully I'll see you guys in class. Also, the link is in the description, but if you're interested on stripping away all the noise and just getting to the price action and the candlesticks, this class is going to be fantastic. We're going to go over a lot of patterns and a lot of strategy that is just associated with candlestick trading, and it's fantastic, especially if you guys are looking to get to the bare bones and no nonsense of what makes stocks move. This class is for you. So hopefully I see you guys there 21 May at 1 p.m. Central Standard Time. And again, the link is in the description, or you go to the website at traderswarroom.com/upcoming classes. And then we have another class. We're pushing this one out a little bit. We're going to do this one on 11 June at 1 p.m. Central Standard Time. We are going to teach you how to trade, pick, and bet with the sports betting range, okay? Basically, we're calling it a sports betting 101, and our instructor, Tech Bets, is the greatest sports bettor that you've never heard of, all right? We have him on the TWR trading platform. He is a fantastic, phenomenal sports bettor and analyst, and he is going to teach you guys the secret sauce that has made him a very effective tool for TWR and sports betting. So definitely, if sports betting is something that you're interested and you're not too, in the know of what really goes on with sports betting, then this class is definitely for you. He's going to teach you the 5 W's, the who, the what, the where, the when, the why, and then going to even explain the how to be successful when getting into this live sports arena and the sports betting, because this thing is booming and I want everyone to have the knowledge. So definitely check this class out. The link is in the description. You can go to traderswarroom.com/upcoming classes, and it's going to happen on 11 June at 1 p.m. Central Standard Time, and I hope to see you guys in that class. The market is our war zone, and stocks are the battle. Join TWR and let's go to war.